Very generous with his time there. Let's get to our next big interview, and it's on the back of EML Payments. Full year results coming in pretty strong. The pandemic encouraging businesses, it says, to seek digital and contactless transaction approaches instead of cash. It's again a thematic that we're seeing through this pandemic.
EBITDA came in at $32.5 million. That was up 10% on a year earlier. Revenue also surged up 25% on the previous corresponding period.
Let's get through the result now with Tom Cregan. He is CEO of EML Payments. Tom, Cregan, welcome to the program. Welcome back, I should say. So we've seen gross debt volume at pre-COVID levels. So returning to pre-COVID levels in June, that's good, but you're still not providing guidance for FY21 at this time. Why is that?
The main reason is that of our three segments, the gift card segment, which is largely in retail malls, retail shopping malls, that still has a bit of kind of uncertainty about it because of social distancing and lockdowns in different countries. And so predicting the volume of that in November, December is hard to do. And 40%-ish of that segment's results come in that month. And that would have a fairly big swing factor in the overall results. So we're just going to wait until that is done and December's kind of in the can, so to speak. And then the rest of the year from that point, will be pretty predictable. So we'll be reinitiating guidance, I would expect, in February.
That'll be part of the reason because we've still got the key Christmas season approaching. Give us some backdrop. How concerned are you about the economic conditions when it comes to the gift side of the business as well ahead of this key period for yourself?
It's a very good question. It's a really unknown thing. I mean, across we operate in dozens of markets in that particular segment, the data is pretty patchy. So you've got we're back to about 75% of what the volume was in that segment pre-COVID, which we think is okay. Some countries, Germany, the UK, Italy, kind of back to normal, almost to pre-COVID levels. Canada and US at about 55% of what they were. So there's a lot of different countries there, and all have a bit of a different dynamic, around COVID and how that's impacting shopping. So we're just waiting until Christmas comes, and then we know exactly what those results are.
Okay, it is one that you've flagged, many months ago as being a big unknown because it's such a concentration in that particular part of the business. But the business, of course, has been growing, many different business segments. Now, the PFS business is generally non-discretionary, more resilient on exposure to government, welfare payments, banking as a service, and the like. So how has that business performed given we're in an environment that we've seen so much stimulus being put into the economy? And what happens when some of that stimulus gets withdrawn?
It's a very good question. Again, a chunk of their 40-odd% of their business is, government welfare and support in the UK and some other markets. That tends to be pretty ongoing, regular support. So it hasn't really been elevated by COVID-related funding that would take it above its kind of a normal level, and the digital banking part of that business, the fintech and the banking as a service element, recovered in July to be that was its highest month ever. So we bought that. It was an interesting set of results, and I don't typically like the word interesting when it comes to results, but we had our EML business, then you had COVID. And then you had a material acquisition on the 1st of April, which also had some kind of short-term, COVID impacts. But the way they're tracking in July and the way it looks in August, their recovery has been much more of a V-shaped recovery because the programs that they serve are non-discretionary, as you said. I mean, welfare is welfare. The UN, for example, is one of their largest customers. So, refugee assistance is not discretionary. I mean, these are funds that have to make their way, to the recipients. And then banking as a service, I think we all would have experienced during our lockdowns in Melbourne, and we're still in one. you don't tend to spend much on anything because you're just not out and about, you're not transacting. And they saw that as well in March and April and May with lockdowns in France and the UK and Spain and the like. But as lockdowns have kind of gone away, then their volumes have rebounded strongly. But I don't think their volumes are stimulus related. I think their volumes are just growth in customers spending what they would have already spent and using that as their kind of primary banking tool.
Tom, let's talk Project Accelerator now. Does that reflect a permanent shift in the way that we're going to spend in the future, in your opinion?
I think for us, it's really exciting. COVID is a disruptive impact on businesses for the good or the bad, depending on what industry you happen to be in. We just ran with it. We said, look, it's going to disrupt our retail gift card business. We always had a strategy of diversification on product and revenue and geographies and other things like that. And the PFS deal was certainly part of that. The minute we knew that deal was being done on renegotiated terms, Accelerator went into full swing. So that was just about reimagining, what this business was going to look like in 3 to 4 years' time. We were seeing, it's been oft reported, and it's totally right. I see the online retailers talking about once in a lifetime trends and acceptance from traditional shopping to online. It's 100% true for payments. Companies looking to move ahead with digital payment programs. Our pipeline has never looked better than what it is. So we just said COVID is an opportunity here, not to be missed. We've got the balance sheet to execute on it, and we're going to drive organic growth through it. And really, the gift card business, which was almost the mainstay of the business, if you like, from an earnings point of view, becomes almost the optionality of the business. So as that recovers, and it'll recover in its own time, that's not within our control. But what is where we deploy our capital and what other verticals we look to get into. And so what's come out of Accelerator is things like control pay in the lending space, progress we're making in the buy now pay later space with different partners in that industry. A bunch of work in the fintech and digital banking space. So we're totally energized by it. We just think that the next 3 years is a great opportunity to reimagine what EML looks like and to come out of it with even higher growth rates than we've had in the past.
Okay, so it sounds like organic growth is a focus, but just give us some sort of color around how the start of this new financial year, FY21, is going. Is the company winning contracts? So what's business like? What's your feeling about sort of the general economic tone out there when it comes to, scoring new business?
Yeah. Some of what I've learned through COVID has been just how counterintuitive some things have been to me, honestly. But, in March, when we had all the doom and gloom associated with it, I would have thought that it would have played into sales pipelines and just slowed that down. And we see completely the opposite. Even in our Australian business, which would be the smallest kind of geographically, obviously compared to Europe and the US, there's 4 dozen opportunities in the pipeline that are being worked on that cover a whole gamut of different industries. It's never been that strong. So the volume of interest and the volume of deal flow, programs that we thought had kind of gone dormant that are coming back, all augurs really well. And then July's volume it's 1 month, so it is a bit hard to read too much into 1 month, but 850 million plus in GPR. So that'll now be a $10 billion segment. I mean, that puts us on the map, in a big way globally for companies with that kind of debit volume in reloadable programs. We did 1.63 billion for the month, so and we did 13.8 for last year. So it's early days, but we're pretty optimistic that the GPR side is going to be strong. We're optimistic that the vans segment, which is our third one, will continue to grow as well as it has in the past. and even in our digital gift card business, which is that's the non-retail piece. So this is cards being given by the employers to employees as incentives and the like. Is now 50% of our gift card portfolio. So even that has really taken shape in the last 12 months as well. So I'm generally we're excited. Restructuring the PFS deal, gave us 118 million in cash. So it's a great thing to have a strategy, but you've got to fund it to be able to execute on it. And we're in a perfect position to do that. So we're pretty optimistic about what we're seeing. We're not seeing the news of the day in terms of COVID, as negative as it is, kind of impact business and impact volumes and prospects. There's a bit of a disconnect there.
Well, good.
Tom Cregan from EML Payments, thank you for your time today, and we'll look forward to checking back with you to see how PFS and other parts of the business are going in the future.
Thank you very much, guys.
Thanks, Tom.